An economist and the founder of Wealth Builders, he specialises in helping business owners and professionals create wealth both inside and outside their company with a clear and practical framework that anyone can follow. He works with business owners wanting to maximise company value, property investors who need ongoing access to funding, and directors aiming for financial independence. He also supports pension holders seeking more control and successful employees who want to move from earning to true wealth building. Through his books, mentoring, and the Wealth Builders program, Kevin teaches how to build lasting financial security through multiple income streams. So please, can we give a warm virtual welcome to Mr. Kevin Whelan.
Hi, Katie. Well, that's a long introduction, and thank you. But the economist thing always trips people up. Listen, it's great. It's great to be with you. And I just want to reflect on Alex's point, which is control the controllables. I mean, for those people, congratulations. What a lineup. You know, it's amazing list of people you've got who've got wisdom to share. So it can't help but help individuals on this call kickstart their wealth in property in 2026. And I'm going to focus very specifically today on funding. So with your permission, I'll share my slides. Katie, is that okay?
Yep, go for it.
Okie dokie, we'll do that. Okay. And then just let me know that you can see those. 1 second. Get the slideshow going. All right. Okay, can you see that okay?
Perfect.
All right. So new sources of money for your property journey and controlling the controllables. Well, look, in the end of the day, we're all looking to build wealth, and we know property is an expensive commodity. So in order to get more property to build more wealth, we need to be in control of our funding. And we're not in control of what banks do, are we? We're not in control of their margins. We're not in control of their underwriting. So if we want to be in control, I'm going to share with you some ways to get interest-free money. Yep, I said that, free of interest, completely interest-free, and at least 2 of those, and ways that you can provide yourself sustainable funding. And if you enjoy being in communities like a PIN community, amazing community, you can actually collaborate with each other and get so much control on funding for the future. But we can't control what Rachel's doing, can we? And we know I suppose the government have been bashing landlords left, right, and centre. And of course, we can't control what's going on with Mr. Trump either. So, yeah, we don't need to spend much time on this because we had that in the introduction. But look, I'm a passionate sharer, a passionate writer, podcasts, videos, and books, however people like to consume information. I recognise and appreciate that. The source of funds that I want to talk about today, I've discovered, since about 2009, when I started using my own funds for property, is really the boring side of things, and it's called your pension and other people's pensions. Now, a quick heads up, there's a major change coming on pensions in 2027, in that everybody who's got one, and if they've got a family, they're going to be affected by inheritance tax. A little bit more on that in a minute. So if you're in the room today and you've got a pension and you've got kids, you're going to lose a lot of that pension to inheritance tax unless you know what to do. And I'm going to show you how to do that as well. But the best thing to do, though, is get that pension working hard. And any pension can do, any pension can move. And the key thing to understand is most people in this room are not old and grey like me. They don't wear the wizened expression of many years of doing this sort of work. What you're looking to do is build wealth today. So you don't need to wait till you're old. You can get access. You can turn your pension into money that you can use today. And I know many people have heard of this concept of the small self-administered scheme called a SAS. Clunky language, I realise, but definitely not clunky benefits. Been around since 1973, and it's the biggest vault that is unlockable, whether it's your money or somebody else's money, to work on your own or to collaborate with others. It's huge. And it just means turning your pension from being owned and run by an insurance company to being owned and run by you. Of course, you get help. Like building property, you become part of a community, and there's 5,000 of us doing this. So no shortage of people who can help, and we're experts in that. And me in particular, found this to be the most powerful tool in finance that I've discovered in my 30 years plus. So I'm going to share with you 3 ways that you can use pension funds to turn them from stock market only investments where you're out of control of the fees, you're out of control in the investment, and you're hoping for a good outcome when you're older, that you can get access to that money and build your property portfolio now. And I'll do that in 3 ways: to buy, bridge, and borrow. I'm going to do that with a little case study or 2. Simple to understand, just so you get the hang of it and see that real people are using their money, including Mr. Zucchi himself, by the way, who has discovered this secret and turned his Cadbury pension into a pension that he can use for property, and I know he does well with that. Anyway, this is a key thing to understand: is a SAS is a trust fund, like all pensions are, but instead of it being a trust fund for 1, it can be for up to 11. So in other words, U plus 10. So the main client on this SAS is Mark, and there are 4 of them in the scheme: him, his wife, business partner, and wife. Now, if you put 4 people's pensions together, you've got a bigger pot, logically, right? So a bigger pot means you've got more purchasing power. So these people who came from a corporate background, normal, putting the pension in, getting the statement, wishing it were better, and then kind of, well, next year is another year and we hope it's better than that. But they discovered SAS and took 4 pensions and pooled them together to create a large pension, which then they were able to use for property. So what can you do? Well, I'm going to talk about commercial first. Commercial offices, lots of our business owner clients, instead of paying rent to a third party, end up buying their own premises and paying rent to themselves. And you can use the pension as a deposit. So it facilitates, if you like. Now, I'm not saying don't use good mortgage brokers. Definitely you should get in contact with mortgage brokers, but this can help you be in control of sources of deposit as well. You can also do commercial to residential. In their case, they did a shopping precinct where the shops essentially were owned by the pension, and the uppers, the apartments, were owned by them, and they were able to split the title to do that. So many creative things. And of course, in half an hour, 30 minutes, I'm not going to give you 30 years of experience. So just think, are you interested in commercial to residential, shops with tops? And are you interested in connecting and collaborating with people in your life, husbands and wives, business partners, joint venture partners? Are you interested in collaborating with other people? Then that's something you might want to note down and have a think about. Because you're going to get a lot of information today, you definitely don't want to be clear. You won't be clear on everything. It will be just good for you to sort of, yeah, it's interesting. I'll find out a bit more about that. Okay, this is the bridge strategy. Now, this is the strategy, not like bridging. Now, normally, you know what bridging is. You've been involved with bridging companies, I'm sure. And they're a professional organization. They charge fees on the front end, usually charge fees on the back end, and they charge a high interest in the middle. You don't need to do that. You can bridge with others. How do you do that? Well, here's my client, Chris and Tracy, who Lloyd's Bank, bankers, they were accountants in a bank, so very cautious people. Over time, they took advice, considered what they were doing, and they consolidated, and he had 2 pensions, husband and wife, into SAS. Now, they wanted to get into property. They were determined to, but they didn't know how. So they found a connection to this gentleman on the right called Christopher, who's a property developer in the Northeast, who had a dilemma. Or a problem, really. He had 150 rooms, wanted more, but he'd run out of money. And most people run out of money before they run out of ambition. So getting control of money, as a reminder, is a key skill. So what happened here? Well, Chris and Tracy loaned. This is the bridge. They took some of their SAS and loaned it. They made a loan to Christopher. Christopher was then able to buy more property, so he got an ROI on that, and he was able to essentially keep building his wealth through his HMOs. what did Chris and Tracy get? Well, they got a different ROI. They got a return on intellect. They got a good return, a powerful return, even a return on interaction, because they found somebody that they could build a relationship with in trust. And many, many people who come from a corporate background are desperately craving that connection. And you could put yourself in that frame. You could be the Christopher if you can get a little bit SaaS savvy. And instead of pensions being boring, pensions can be interesting. Well, I think they're exciting, but then again, I'm me. But they got the free education and they got an interest rate on their money. So the fair exchange that took place meant both parties won, and much lower cost and much easier to arrange than traditional bridging funding. All right, the borrow strategy. Now, takes a while to get your head around. So shake yourself off, have a sip of caffeine, and have a look at this one. So this is Toby, my client, won an award. You can see him on the right-hand side, SaaS Investor of the Year 2024. Also, my client won 2023, and I think we're just about to win 2025 as well. Anyway, putting that to one side, what did he do to make him an award winner? Well, he found this property on the left-hand side. Now, that's a resi property, right? It's not commercial. So somebody out there will be saying to you, either on your shoulder or somebody in another room somewhere, saying, you can't use a pension for residential property, can you? Yes, you can. Bob the Builder says, or Kevin Whelan says, yes, you can. So he bought this property, the dilapidated property on the left, which of course, you know, a dilapidated property you can't get a mortgage on. So he bought it in cash. How did he do that? He loaned money from his SaaS to his own company. Now, in SaaS, you can lend up to 50% of the value of your SaaS. So if you have a husband and wife and they combine their money, let's call it $500,000 for a number. Doesn't matter what the number is, but if it's $500,000, 250 can be loaned. If it's 200, 100 can be loaned. So in this case, you didn't need an awful lot of money, but he bought this property in cash, just over 100,000, if I recall the numbers, and no competition. Nobody else was buying it because he got the cash. So he bought it in cash with the pension loan. The pension loaned him the money. Now, he knew that the local council were willing to provide a grant or support to bring this property into a good state of repair. So he got an interest-free loan of 40 grand, interest-free, so 40 grand of money, no cost, no fees, from the council to bring this property into repair. So the combination then of the SaaS money loaned, borrowed from the council, interest-free, did the property up, refinanced it using traditional finance. So as I say, there's a great connection and a combination between us and good brokers. So he got a good broker, replaced the finance, paid his SaaS back. Now, once he pays himself the SaaS back, the SaaS doesn't own the building. The SaaS doesn't own the property. He does. So he's used his pension now to build wealth now, not when he's older. You get the point? So this is how the SaaS loan back, which we call the borrow strategy, is probably the most powerful for you if your residential property is your main thing. But it's only 50%. Now, I have to say that one of the reasons why I love SaaS is it's tax efficient. So you get corporation tax relief. So if you're making profit, and we work with a lot of business owners, they're making profit. So instead of paying the tax, they don't pay the tax and divert the money into the pension, into the SaaS, into the trust fund, which is there for themselves and their family to use, whatever they want to use that money for. There's no capital gains tax. If you own an asset in SaaS, that's capital gains tax free. It's also free of inheritance tax now. Inheritance tax is changing, and I'm going to talk about that in just a moment. But there are some ways that SaaS is so much more powerful because of the combination of working with others, being super tax efficient, and being able to access the money now. Now, I'm a great believer in legacy, and it's a big part of my reason why is to be a great leader of my family's wealth. And I've created my own family wealth fortress, as it is, to protect and build and grow that, and to transfer that on to the next generation with the wisdom that they need, because nobody's teaching them this, are they really? Nobody in school, nobody at uni, nobody at work. Better be you, otherwise it's Facebook or some other social media. And thing to note is pensions up until now have been inheritance tax free. But back to Rachel, she made the decision that from April 2027, pensions, if you die with a pension that's still got money in it, then that pension will be subject to inheritance tax. Now, SSASs are slightly different in that regard, insofar as, number one, the best way to use a SSAS is to consolidate your pensions. And by consolidating workplace pensions, personal pensions, SIPs, sometimes final salary scheme, not public sector, not that kind of unfunded scheme, doctors, nurses, so on. My son-in-law is a fireman, can't use that pension, but any other pensions can pretty much be moved. And because a SSAS is a multiple member scheme, so husband, wife, 3 grown-up kids, so I've got 5, then I can earmark, which means I can allocate money and step it to the next generation. Now, it takes a while, but then inheritance tax is only paid on second death anyway. So most people have got 20 years or 30 years to plan. And also, if you can think back to the story I gave you of Toby, who took money from his pension and used it to buy an asset, well, you could use it to buy the asset. Imagine he built that in a company where his kids were, he's got 1 son, but if his kids were the directors or shareholders, then you're building wealth in their name if you choose to. So the great benefit of SSAS then is you've got so many more ways to control inheritance tax in a way that is not available in a SIP, not available in a workplace pension, and not available in any conventional pension. So as I said before, if you've got a pension and you've got children, please make a note to find out about this. And I've written a guide on this. As I said, I'm a keen writer. How to protect your pension from the inheritance tax changes. There's a tax rate coming in pensions next year. We're going to be pushing this big style in 2026, and you're welcome to a copy. It's completely free of charge. So what do wealth builders do? Well, just to make it clear, we are SSAS experts. Fundamentally, we're financial GPs, really, but we're brokers of SSAS, meaning we connect people to the right administration support, a bit like a bookkeeper for your pension, but provide all the education, the support, the site visits, the community. It's really a wonderful community of people who are using their pension for their own outcomes, which can include, by the way, other things like trading funds, options, crypto, gold. There's a whole raft of things that I haven't mentioned because this is a property-focused event, but nonetheless, diversification is an important thing, so we know how to do that as well. Now, we do provide resources, and I mentioned I like to write, do videos, and do a podcast, and we've got all of these available for you. I'll give you a link to that in a minute, but start thinking about your questions. Start thinking about what have you got and where is it? Have a think about what fees you're paying even, because with a SSAS, the fees are fixed. There's no percentages. And with AI having driven down the cost of funding, most individuals I meet are buying their funds retail. They're not using AI. They're not using technology. So they're paying through the nose through financial institutions that want a percentage of your money ongoing. So they get a recurring income. I'd much rather you keep the recurring income. And if you want to do that, that's great. Quick mention before I give you the link. Wealth Builders podcast called Wealth Talk. Simon's been on there probably more than anybody else. He's a great guest, always gives great value. But I would mention podcast number 74. We've done 310 or so now. But number 74 talks about how to be investable using SSAS. So using a bit of SSAS knowledge that allows you to contact other people who've got pensions, help them understand that they could turn their pension into something they could use, and they could use it to lend to you, and like the Chris and Tracy story. So there's the link. If you'd like to get the information, and of course, we'll send you the guide to inheritance tax as well. Now, I know it's been a bit of a whistle stop. It doesn't. A lot of questions normally come from SaaS because that's where the complexity comes. So I usually give a little bit more time for questions because that's where people just need to get their head around it. And by hearing other people's questions, it's a great benefit to do that. So I'm going to go into my Zen mode now, Katie. I'm going to go into my SaaS mode for questions. And if we can leave that up for people just to grab, but if you'd be kind enough to see if there are any questions. If not, then I've got an early afternoon.
Of course, we have got quite a few questions come through, and we've actually had a couple, one from Bruce, but it's been repeated by a few people. With SaaS pensions, are NHS pensions excluded?
Okay. It's a question I get every day. Any pension from a blue light organisation or from a public sector, they're unfunded final salary schemes, which means there's no money there. So there isn't anything to move. Your pension, if you're in the public sector, will be paid for by taxpayers when you reach your retirement age. So unfortunately, the answer to that, Katie, is no.
No problem. Thank you for answering. We have got one from Pauline. What if you are receiving a pension? How can you make a comparison to work for you? Could you open a further account to then use the funds in that way?
Okay, good question again. Now, there are two ways you can draw money out of a pension. Forgetting the final salary one, the public sector ones, but let's say it's money in a pot. One is called drawdown, where basically you've got like a water tank of money and you turn the tap on and you draw money out. You can move that. And then you can reinvest that in property, you can reinvest that with others, and you can use that money to build you up, rather than just sticking with the volatility of the stock market. However, some people have bought what's called an annuity, which means they've given the capital that they've got in their pension to an insurance company and basically bought an insurance policy to pay them an income till they die. Now, annuities, pros and cons of annuities, won't go into that. But if you have an annuity, you cannot move that. That deal is done. You've given your capital away. If you're doing drawdown, in other words, you're taking money out on a regular basis, then you can move that money into SaaS.
Amazing. Thank you. One from Claire. What is the most that you can put into a SaaS at any one time?
These are great questions, Katie. You've got a very erudite audience, obviously, right? £60,000 per year per director.
Perfect.
All right. However, you can go back 3 years. So you pay the current year, you go back 3 years, pay that, 2 years, obviously subject to how much money you've got available. And if you've got a super successful company, so if you're here and you've got a trading company that's super successful, you can actually pay £500,000 in 1 year and get all the tax relief back in the same year. It's a massive winner for the big hitters in the business world. You can't do that in a SIP. You can't do that in any other type of scheme. So definitely worthwhile thinking about. Another point I might make, Katie, if I've got time here, is on the legacy side. A lot of people who've got for those who've got older kids, say 16 or older, then they probably know quite a lot about AI, don't they? And what you can do if you wanted to is you could make your kids either employ them in the business to do work, social media work, or make them an AI champion of your business. And you can pay money to them, which reduces your corporation tax, or you can even pay money into a pension for them so that they can start getting the hang of using money and seeing themselves as a future investor. I'm a very passionate believer in getting your children involved in things that are wealth building earlier, because it's almost impossible to become wealthy in a job. Almost impossible. And unless you inherit money from somewhere else, it's really tough gig. So getting your children to learn a little bit more about how to create recurring income, how to find ways to make money while they sleep, and they think about that, then they'll make better career choices in the end, including some of them being in property and some of them being entrepreneurs. It's not necessarily the old go to uni, get a good job. It's not necessarily a pathway to wealth anymore. So just a thought.
Amazing. Thank you for that. A question from Anthony. How do people start their SAS pension? How much does it cost?
Yeah. Well, how you start is like any starting point, is the precursor to all good action is a little bit of education. So download the information that we've sent you and then book a call. And if you're eligible, so how are you eligible? Well, you have to have a limited company. If you don't have a limited company, you are not eligible. You cannot have a SAS. You cannot create a limited company today to have a SAS tomorrow. You need a company that's doing something. So that's how you start. Have you got a limited company? Have you got a pension? If yes to both of those, then get the education. How much is the cost? It costs typically around £3,500 to do a SAS. But let's just talk about what that means. It's set up for your lifetime and your kids' lifetime. So it's a long-term, multi-generation family trust that costs a few thousand to set up, but it's cheaper to run conventionally because you're not paying fees for the management of your money because you're taking that responsibility yourself, and you can learn how, and we teach you how you can manage money, or you can build it in property so your returns will be massively higher, whether you want them in your pension or whether you want them outside of your pension, as I've given you examples. So we always do a cost-benefit analysis for anybody, and if it's not a complete no-brainer, don't do it, stick with what you got. But 5,000 of us, including people like me, including Simon and many other people, I think I've recognized some names in the room, have taken that step already, and they're making their money work massively harder.
Amazing. And just to confirm, this is only UK-based limited companies?
So only UK-based. Properties can be bought abroad, but the limited company must be UK-based because it's a UK-registered pension. It's not an overseas pension. So if you live in Dubai or you live in Holland or Sweden or wherever else, you're not eligible by default. So yeah, it's a good point. It's for UK taxpayers, not for overseas taxpayers.
Amazing. Thank you, Kevin. I don't know about you guys, but this is very, very valuable information, especially for those who haven't heard of this before. So do make sure you take advantage of his offer today. Someone has asked, how small can your pension be to move into SAS? What's the minimum requirements?
Well, again, good question. I've set up SASs for people with nothing, no pension, because they didn't really fancy pensions until they discovered SAS, and then they start piling that money in. That's 60 grand a year in. So 0 is the real answer. But if you don't, if you're let's say you're a property owner, you're still got your director's loan account, you're not really paying corporation tax yet, so it's all really dependent on how much you've got. I'd say 75 to 100 grand would be a good place to start. I mean, you've got to be able to use it in property, right? So probably that kind of figure. If you've got less than that, it's probably worth thinking about, could you build that up? Could you collaborate with previously if you just thought, well, my pension is my pension and I've got 50 grand, but as your wife or husband or spouse or significant other or business partner got 50 grand, now you've got 100. Now it's definitely worthwhile. At 100 grand, it's a no-brainer. Below that, you've really got to have a good plan and be committed to it.
Amazing. Donna has asked, if you're a shareholder but not a director, can you do a SAS?
Yes, a SAS needs to be created with the application called a sponsor. So the sponsor needs to be a limited company. So therefore, the director of a limited company needs to agree because they've got to send an application in. So, but the members, who are called member trustees, and remember it's up to 11, maximum 11, do not have to be directors. So you could have your grown-up children in 18, not directors, but they could be involved at that age. And as I said, you can start to cascade money to them gradually, and they become part of a family trust fund. So you don't need to be a director. You don't need to be a shareholder. You need to be connected enough to the director who invites you in. And that could be a child over 18, business partner, a sibling, a family member, a joint venture partner. Wherever collaboration exists in the world, collaboration can exist with pension. But do bear in mind, if you're going to invite somebody in, you're going to be in for the long haul. Right? A pension is not just for Christmas, it's for a long time. So you want to make sure you know, like, and trust them 100%.
Amazing. A kind of combination of a few questions here. Can you transfer your workplace pension or an element of it, your old age pension, or there was another one, your private pension into a SAS?
Right, okay. So 2 out of 3 ain't bad. So you can't move a state pension. State pension isn't payable till 66 now. So if you've got people in the audience who are drawing their state pension, there's no money there. You're paid by the taxpayers. So same answer as the final salary scheme for doctors and dentists and nurses and so on. Private pensions, dead easy. So we've done thousands of those, thousands of SIP to SAS transfers. By the way, no SAS back to SIP transfers. Once somebody moves into SAS and they see the flexibility, they don't go back to being at the behest of somebody else. Now, the complicated one, slightly more complex, Katie, is workplace. Workplace pensions can be moved, but all pension funds in workplace are called discretionary funds, which means who's got the discretion? It's the employer. So the employer has to agree. Now, employers don't normally get that question asked of them a lot. So their instant reaction is normally to say, oh, no, we don't do that. But they have to, okay, because the government introduced a set of rules way back 10 years ago called pension freedoms, which allows people the right to control their pension. So there's a way to do that, and we help people do that. So if you're interested in SAS, you've got a workplace pension. There's normally something called a minimum partial value, which means, let's say you've got 100 grand in your workplace pension, and you don't want to lose the employer contributions. They're very valuable. You want to keep them. So you don't want to leave the scheme, but you want the money. Okay, you do a partial transfer, as you said, part of it. Let's call it 99 grand. And you move 99 grand into your SAS, you leave the 1 grand in, you get your contributions every year, and then next year you do it again. And the year after that, you do it again. And the year after that, if you've done your property building right, you won't have a job anyway, because you'll have left it because you're making so much more money in property. But yeah, and the biggest sum of money we've ever got for a client where the employer said no originally is £575,000, Katie. That's how much money is at stake. He was told no, and he went, Kevin, I can't do it. No, hold on. Let's find out. And then, with a little bit of intervention on our part. But we're experts in this. Pensions are boring by most people. They don't understand them. You don't have to understand them. You just have to see it's cash. So if you've got money in your pot now and it's 100 grand, that's cash. What do you want to do with it? And then I'll be able to tell you, yes, you can do that, or here's how you can do that. So think about your money as cash. Think about your pension through a new lens that you can use it to build your wealth instead of doing what you're doing now, which is drifting in circles on a stock market which you can't control and getting a retirement income which you can't control. So if you're interested in control, the SAS will be a better solution for many people, not for everyone. You have to want that control. You need a limited company. You need a reasonable pot.
Amazing. Thank you, Kevin. Another couple of questions is, how long does it take to set one up, and how long does it last?
Okay. It takes right. So here's the process. So once we've assessed eligibility, we submit an application to HMRC for approval. Now, HMRC do not have a service level agreement with anybody. So they take as long as they take. They're currently taking 16 weeks. So a run rate on SAS now is about 16 weeks. So they'll take 4 months, and then we've got a 100% success rate. So we guarantee it. So if we apply for a SAS, you get one. It takes 4 months. Then the money's got to be moved, which takes a few weeks, maybe a month or 5 months. If you get a If you're slow, or the inland revenue are slow, or your company moving the pension is slow, the insurance company could be 6 months. So it takes up to 6 months, and it lasts for 125 years. So it's worth the wait. I mean, it's less time than having a baby. Worth the wait, I tell you. 6 months to change your life. And I was talking to one of my clients yesterday, started off with 450,000 3 years ago in a pension, it's now over 1 million. It's just the power that people, it's not me, I'm not doing the work. I'm facilitating them being able to do it. And when they use their money for things they know how to do, and not paying somebody else to do it, they massively gain from that. So 6 months, 125 years. I'm too enthusiastic about it. I'm sorry, I have to shut up a bit now.
It's good to have the enthusiasm. That's what we want from you, Kevin. Joanna has asked, how does she find out how much she has in her pension?
Yeah, another good one. Well, most pensions these days, if they're live, they're online, so you can look that up. Most providers don't want to send paper, but you'll get paper statements from some. If you have got a history where you used to work for somebody but you've forgotten, or you were, I don't know, a lot of women actually lose their pensions completely because they get married, change their name, have a family, and they just forget the pension. So there's a tracing agency, pensions.gov it's called, and they will help you find lost money. Insurance companies that have gone bust, companies that have gone bust, whatever, and there's a way to do that. So we give people a checklist. It's all driven by your national insurance number. So as long as you've got your national insurance number to hand, if you're a bit of a freak like me, I know my national insurance number. I know all my numbers of everything. But anyway, you just have your national insurance number to hand. You drop an email, drop a letter, old-fashioned snail mail if you have to, and they will tell you whether you've got any pension. Biggest sum of money I found for somebody who thought they had next to nothing, 100 grand.
Wow.
And they just went, no, I can't, pension, schmension, can't be bothered. It's like, yeah, but just do it for me. And he's called Andrew. Andrew, just do it for me. Oh, okay. He didn't do it. Andrew, do it. He did it. 100 grand later, he went, just didn't realize, and it was a final salary scheme, but just didn't realize that the pot was so much bigger than he thought it was because it was final salary. So, and just one quick point, massive sum, pushing now 30 billion. Right now, that's bigger than the black hole in the economy. That's people who've lost pensions and forgotten them. They're just floating out there. So there is a process, and we give people a checklist to grab and repatriate their pensions. The average is only about 10 or 12 grand. But look, if you had a check arrive through the door, or somebody deposited 12 grand in your bank account tomorrow, you'd have a good day, wouldn't you?
Definitely.
And it takes about 2 hours to do it. So, I prefer recurring income. I don't work for an hourly rate, but I'd spend 2 hours for 12 grand. That's 6 grand an hour. I'd do that. But people won't do it. There'll be people in this room, I don't know how many people registered, maybe 1,000 people. Probably 200 will do it. And the other 800 will just go the old pensions mention route and forget about it. But that's okay. If we can find a couple of hundred people who are willing to do it, they'll change their life, and they'll change their kids' lives. Otherwise, their pensions are just going to end up being paid to inheritance tax. So.
Amazing. You're getting a lot of shout outs in the comments. People are absolutely loving this. We have time for one or two more questions. One is, can you ring fence your SAS using a trust structure?
A SAS is a trust structure, so it is already ring fenced. So it's protected from litigation, it's protected from tax, it's protected from creditors. It's a trust fund that's already ring fenced. So you don't need to add a structure to it. It's already pre-cast concrete trust.
Perfect. And if I've just opened a limited company, can I immediately open a SAS account, or does it need to be opened for a certain amount of time first?
Yeah, there's no certain amount of time. I think if you've got, the question is, have you got a limited company? Yes. Doesn't matter how long ago it started. if you've got a decent pension, even if it takes us a few months to get the right evidence to the revenue, I won't go into the details of that, but so that person, if you've got 7,500 grand and you've got a limited company, get in touch, because we'll tell you what to do, and then if you resonate with us, we'll help you do it. If you're not, you can't set up a SaaS on your own. You just can't do it. There's no method of doing it, so you have to use somebody. And I'm delighted to be, frankly, the head of the biggest SaaS broker in the UK, and I think probably we're the only one, to be honest with you, because we shop around and match our clients with the right administration. You'll find administrators, but they're not necessarily going to help you plan your inheritance or show you how you can attract private investors, things like that. So administration is the easy part. The skill is knowing what to do. It's the creativity, which is why, as I said at the top of this meeting, the number of people I see on that list who I resonate with, who are just brilliant at what they do, they'll give you a distinction of creativity. They're not going to give you an admin distinction. If you do this, you'll save 50 quid. They're going to give you a distinction that will make you 50 grand. And that's what we do. We help people make 50 grand or more. So the cost of 3.5 grand to do it should be dwarfed by the benefit. Yeah.
Amazing. Well, thank you so much for joining us, Kevin. I think the guys have got so much value from this today. The comments are absolutely blowing up. I think there's a few clients of yours in there as well, giving you a shout out. So definitely go and see what Kevin is all about. He is an incredible guy. I've heard many, many good things about you, and now I've just heard even more information myself. So yeah, make sure you take this on board, guys. And thank you so much, Kevin, for joining us.
And thank you for hosting so ably. Thank you, Katie. Bye-bye for now.
Thank you. Have a great weekend.
Bye-bye.
So guys, that is Kevin Whelan. There is a poll in the chat that you guys can take part of. The agenda for today, so just for those who have joined a little bit later today, next up we've got